Can see that market is trending to the upside, right? So right now, what are we anticipating? All we are anticipating is to follow what the market is doing to continue the direction of the market, right? So here, this is where we are focusing, right? This is where we are focusing. So here, this is where we got our last break of structure to the upside, and here we see this liquidity sweep. You can see this liquidity sweep here, right? And then what else did we see? We see price push all the way here, and right now price have retraced to a very good buy level, right? So from here we mark our fib level. This is our Fibonacci, right? We mark our fib level from the swing low to the swing high. We want to see price come back from 50% from here, from this level here. Anything this side is good to look for a buy, right? But assuming price is still within the upside, assuming price is still within this region, it's not good to look for any buy, right? We are looking for buy below 50%, which is discount level. That's we are looking for a buy, right? So
Hello,
right,
sorry, we can't see your screen.
you can see my screen. Can you guys see my screen? Oh, sorry. Can you see my screen now? All right. All right, so we can see this fib level, right? So what we are looking at is we are looking to buy anything below 50%. You can see this is the 50%. Anything this side, we are looking for a buy to continue the uptrend, right? That's what we are looking for. So right here we have price. We can see that price have come even below 50%, and then price came all the way to below 70%. Price came all the way to 70%, right? Which is a very good one for us, right? So what are we anticipating? From this level, we are anticipating to look for opportunities to take a buy because price have retraced to a good level where we can now start looking for a buy. So moving down to 1 hour time frame, we need to look for a change of character in 1 hour time frame. Remember, market is in an uptrend, and because in an uptrend, we want to see that markets have shifted structure back to the upside before we can join the trend, right? So right here we can see where we got this change of character. Let me quickly delete these stuffs. This is where we got, this was our last breakout structure here. This was our last BOS, right? And then price has taken it out, right? Indicating price has taken out the low. Remember, in the market structure, price is not expected to take out the low that caused the previous high or a low that caused the previous lower low. So here we see price took it out, right? And price is reacting from, remember, price is already below 70% of fib level, which is a good area to buy. And if we look here, we can see that price is reacting from a breaker block, which is a supply level turned to demand. So this is a supply level where price was supposed to tap. Price was supposed to come here. If price was supposed to sell, it was supposed to come here and continue sell, but price broke it out, right? So now price reacted from that particular breaker block, right? So now we have gotten a shift in market structure. What else are we anticipating? We are now looking at for where to enter the trade. Where are we going to enter this trade? In all sincerity, even where price is now, is good to enter a trade. It's good to enter where price is currently now. But what do we anticipate? Here we have an imbalance here. This 1 hour, this 30 minutes time frame, we have this imbalance here. We have this imbalance here, and it's unmitigated, right? I hope you guys can hear me. Can you guys hear me? Can you guys hear me? If you can hear me, drop one on the chat box. If you can hear me, drop one on the chat box. If you guys can hear me, drop one on the chat box. All right. So looking at this, we can see that we have this imbalance here, right? I'm anticipating price to come and fill this imbalance. If we go to 15 minutes time frame, we can see it more clearly. So on 15 minutes time frame, we see this imbalance below here, and then we have this other block where price is reacting currently now, which it looks like a good place to buy, if I may say. We have this other block where price is reacting at the moment, this demand zone. Price is reacting there, and this demand zone caused a break of structure here. You can see the POS, right? Here is the POS. So at this level where price is, if we are anticipating to buy from here, if we're anticipating to take a buy from here, right here, then our stop loss is going to be quite below. Why is it going to be below? Because of this imbalance, because price might still come down to fill this imbalance, right? So our stop loss will be below, in order not to, if you put your stop loss here, price might take it out and then tap on this imbalance and continue back to the upside. So in order to avoid that, you can just put your stop loss below uh below this, just somewhere here, and then your target, because this is a swing setup, right? So you are targeting the swing high. You can hold it for as long as you can. You can target the closest liquidity, which is, this is the closest liquidity we have here, and then you can still hold it until it gets to the swing high, right? So this is the setup we have. So if you want to take a buy right now, you can take a buy right now. If you want to take a buy right now, you can take a buy. But if you want to wait for price to come to that imbalance, you can still wait. All the best. If you are taking a buy right now, it's okay because price is already at a demand zone. If you are waiting for price to come back down more, it's still okay. But I think I'm going to be going in right now for a buy. I'm going to be going in right now for a buy, guys. I'm placing a buy right now, guys, on GBP USD. I'm going in on a buy. Guys, you can take a buy. Guys, you can take a buy. You can take a buy. I'm in on a buy right now, and I'm in on a buy. Anybody taking a buy? Anybody? All right. You can see I'm in on a buy right now. I'm in on a buy right now, guys. You can see my screen. My screen is showing maybe your network, but I'm in on a buy right now, guys. I'm in on a buy. I'm in. I'm in. Let me drop the screenshot in the group. I'm in on a buy. So I'm in. I'm in. I'm in. If you're not in, you can go in right now. If you're in on the buy, just drop one on the chat box. Let me see if you're in. If you're buying right now. Anybody buying? If you're buying, let me see your one on the chat box. If you're buying, let me see your one on the chat box. Okay. Yes, yes. Buy now, buy now, buy now. I'm already in. Buy now, guys. Buy GBP, JPY. All right. So please apply proper risk management. Don't over leverage. Don't over leverage, please, guys. Don't over leverage. So price is reacting from a demand zone, which I anticipate is going to take off from there. I anticipate is going to take off from there. Uh, Remember this London section that we are about to. London section is about to open by 1 p.m. and I'm anticipating price to just go in our favor. So let's see how it goes, guys. uh, so if you are targeting, you can target this high as your first take profit. You can target here as your take profit, right? You can target here, or you can still target above, depend on how long you are willing to wait. Depend on how long you are willing to wait, guys. Depend on how long you are willing to wait. If you are willing to, if you are willing to hold it for days, let's say throughout this week till next week, then you can hold. But if you're not willing to hold, you can just target this level. Just target the first area, which is this level for a buy for a TP. So which is 203.247. That's my TP. That's where my TP is. So I already dropped the screenshots on the group. I'm already in. So let's see how it goes, guys. Let's see how it goes. Let's see how it goes. All right, I think somebody just joined us. Not quite long. We are in on a buy on GBP JPY if you have a trading account. So you can join us on the trade, but please apply proper risk management. Very important. Don't over leverage. Like I always say, past profit does not guarantee future ones. So let's just know that trading is all about a risk game. So we need to apply proper risk management is what keeps us long in the game. So you can't have a $10,000 profit and you are risking $500 in a single trade. That's a bad risk. You should at least be risking 1% of your account. That's if you have a proprietary firm. But if you have like $100 you're trading, or $50 of your funds you are trading, you shouldn't try to risk. Maybe you have $100, you're trying to risk $60 in a trade. If that $60 goes against you, you are going to be mentally disabled. Like, it's going to mess you up psychologically. That's why you need to use proper risk management by dividing what you have based on percentage. For instance, let's say you have $100 account, you should be you should be risking nothing less than $10. If you have $100 account, no matter how good the setup looks, don't risk more than $10 in your $100 account, because that except you want to do flipping, except you are willing to risk the entire $100 account. If you're not willing to risk the entire $100 account, you have to risk nothing less than $10, because if you lose $10 in your $100, it won't really affect you like when you lose $60 in your $100, or when you lose $70 in your $100. So risk management is what keeps people long in the game. It's not flipping. You can deposit $100, stack positions, and take that $100 to $1,000 in a single trade, but it's not a way of trading. It used to make you feel excited. It used to make feel um oh yes, you killed the market, right? But the other way around, on a long run, it doesn't sustain you in the market. On a long run, it doesn't sustain. Flipping does not sustain. Most people that flips their accounts only put the money they are willing to risk. For instance, you may have $100 and you see somebody post online where he took $100 to $1,000, and you're trying to do the same thing without knowing that the person who took $100 to $1,000, that $100 he took to $1,000 is just like he's flexing money, or let me say his miscellaneous funds, right? But you see him put it and flip it, and you that have all your life saving is $100, you also want to do the same thing. It can't work, because this person is only risking the money he can use to flex or even dash people out. while you are risking your entire savings. The psychology is different, right? Just like some of us here, you can confidently dash somebody 10k, 20k, you will not feel it, right? That's the same way they can confidently flip $100. If they lose it, they don't feel it. But you, when you lose that your entire savings of $100, you might even go to bed without food. You might start feeling sick. Like a lot of things are involved. That's why you need to always apply proper risk management in trading. All right, I think we are already going up in profit. We are going up in profit, guys. So this is trading for you actually, guys. The most important thing we need to understand in trading is not as complicated as it used to be, or as people used to see it. The only thing that complicates trading is your psychology. In all sincerity, trading is not complicated. The only thing that makes trading looks complicated is psychology. You are dealing with money, and this money is just like most of us here in Nigeria. We know that for you to have $100, that's about over 150 to 160,000 naira. And for some people, that's like their 2 or 3 months salary work, right? And you can't afford to lose that kind of money. Let's say it's your 3 months salary work and you lose it within a few minutes. You're going to be messed up. But those of us that are in places like UK, where your day pay is up to 800, 500, or $1,000, right? You can afford to lose even $500. So that's why trading tends to look more difficult for Nigerians. I must tell you the honest truth, because for you to gather $1,000 to fund and trade, that's over 1 point. That's almost close to 2 million. You discover is a big deal. It's not even that. It's not even like there are opportunities you can just go there and make the money. You discover that even as a graduate, your work can't even afford the money you're working, the place you're working as a graduate can't even afford paying you 2 million naira in a year. And you can't afford to lose that kind of money in trading, right? So it now affects the psychological aspect of it. That's why many Nigerians tend to suffer more in trading, more than African, more than Americans and Europe. I have few friends of mine that are based in Europe, right? They they we all started trading together, but I was a kind of a bit ahead of them, right? Because as at that time, I resigned from every work I was doing, so just to focus on trading. So it made me to be a kind of a bit ahead of them. So it got to a point I started teaching them. But do you know that as we talk now, they have they have gotten over 100k accounts, like more than 4 5 times past some make withdrawal from some.
Alright, guys, if you have watched up to this level, this is a bonus tip for you. So, to join the community where we do this live analysis and live market, where we trade live together, click the link in the description of this video so that you can join the community and let's grow together. Please don't forget to subscribe, turn on the notification bell for more updates. Stay updated.
So for them, they once they do a day job, they have raised the money they need for a 100k account. But me that is Nigeria, bro, for me to buy a 100k account, that's like almost a million is what you need to have. Like almost 1 million naira, because 100k account, your firm sells it $500, some $600. That's like almost 800 to 900 or 1 million naira. It's not the same, right? And there's no place you can do work here. There is no work you can do here in Nigeria that you can raise that kind of money in a month or 2 months or 3 months, except you have a very nice business. So the psychological aspect of trading is what makes trading to look so complicated. That's the honest truth. But trading itself is not complicated. That's why I used to tell people, when you come into trading, don't have the mindset of you want to make it in 1 month or 2 months. It will never work for you. It's best to have a long-term mindset. When your mindset is, let's say, if you are coming into trading, you say, okay, at least within a space of 5 years, at least within a space of 4 years, at least just give yourself years. Just like when you are going into university, for instance, you want to study medicine and so on, you know that by every means and every chance, no matter how fast you want to be, you must stay 6 years in school. So when coming into trading, still have the same mindset. The minimum course you are going to study university is nothing less than 4 years. So I used to tell people, if you want to go into trading, give yourself at least 4 years. If you stay for 4 years, you didn't made anything, and after 4 years, you analyze yourself, you discover that you wasted 4 years, then you can give up on trading. But if you have stayed in trading only 2 months, 3 months, 1 year, a year and plus, and you're feeling like this kind of thing, no, just give it time. So what we did here now, how did we take this trade? How we took this trade is very, very simple. For those that just came late, let me give you a quick recap. We saw that market has been in an uptrend, right? Price has been in an uptrend, right? GBP has been in an uptrend for a very long time, since 2021. If I'm not mistaken, it has been an uptrend. So all we just need to do is to follow the market trend, follow the bias of the market. So looking at it here, we see that this was a last low that caused this break of structure. This is a break of structure here, and this low swept liquidity. This is a sweep of liquidity here. I don't know if those of you that are using phone, let me just zoom out so that you can see clearly. So this is a sweep of liquidity here. After this sweep of liquidity, price broke structure to the upside, and we can see this aggressive candle here, right? So this aggressive candle caused this break of structure to the upside. What do we want to do? All we just want to do is to look for a place where we can enter and continue the trend of the market. Is buy. All we need to just look for a place to enter and continue the buy. So what did we do? We saw that price came to this breaker block. This is a breaker block. If you don't understand the concept of breaker block, I think I have a video on it on my YouTube. So this breaker block. Breaker block is a supply level that failed, or a demand zone that failed, right? So this is supposed to be a supply zone, but price broke it above, right, and gave us a structure, a break of structure to the upside. And we see that price came to that breaker block. Why did I even have confidence to take a trade from here? Look at why I have confidence. First of all, if you check on the group, if you're in our WhatsApp group, you discover that I posted in the morning that I want to see 4 hours candle close, right? This was why I said I wanted to see that 4 hours candle close. This each of these candle is 4 hours, so this is a 4 hour bearish candle. So after this 4 hour candle closure, I wanted to see another 4 hour candle to cover this old bearish. Let me zoom out. I wanted to see another 4 hour candle close up to cover this particular candle here. For me, that would be a kind of a change of character, because it's an indication that buyers have now entered the market, and that's exactly what happened, right? Price came and took it out. So right now we are looking at for buy from this particular zone. That's why we took this buy. And where did we enter from? We entered. All right. So what I was saying, this was a very clear confirmation for me to now start looking out for opportunity to buy, because these two candles have indicated that buyers have entered the market. That's how we caught this buy. And this buy, we took it from a 15 minutes order block. A 15 minutes order block. So this was where we took this buy from, this particular order block here, right? That's where we took from. Though we still have imbalance below. We still have imbalance below, right? Price might still drop, come back to this imbalance before moving up. That's why I said our stop loss should be extended very well, so that when price tends to drop, it will not take us out on loss, right? So that's why we need to give gap on our stop loss. So but for me, I think price is going to be taking up from this particular place where price is now, because I'm seeing something right now. Okay, I'm seeing something. It seems like this imbalance has been mitigated. All right, this imbalance has been mitigated. Yes, oh yes, it has been mitigated. You see, this is why it's very important to always study charts. You see, imagine we are still waiting for price here, we miss this trade. Why? Because this imbalance has been mitigated. You can see this candle retraced and tapped inside this imbalance, so it has violated this imbalance. So this imbalance now is no longer useful because it has been mitigated. So you see, that the place we took this trade is the best place we could have taken the trade. So that is it all about trading. You just have to follow the structure. When you understand structure, you have understand trading. When you understand structure, you have understand trading. All you just need to do is come, mark your charts, wait for structure, follow what price is doing, and that is it. So this trade, I hope everybody's going to make money from the trade, and definitely everybody's going to make money. It looks so nice. Let's see how it's going to go, guys. So I don't know if you have any question. If you have any question, you can just if you have any question, you can go ahead, unmute yourself and ask the question. Just 2 minutes only. If you have question, just unmute and ask. Anybody has a question?
Yes, sir.
All right, go ahead, fire now.
Okay, sir. My question is the order after the order block here. I think there is imbalance in between before the order imbalance at mark out.
You said after the, is it after where we entered?
Yes, yes. After yes. See the order imbalance here.
Okay, this one
Below.
here.
Yes, sir. Yes, sir.
Okay. When price, for me, when price takes off aggressively like this, right? You can see this aggressive push, price took up aggressively, right? Many
Yes, sir.
times 90 or let's say 70 out of 100, price will never come back to this level. That's it. This one now is based on the experience on the market. 90 out of 100, price doesn't come back. Sometimes it does, but 90, I'm sorry, 70, or let's say 7 out of 10, price does not. Sometimes it also does. Are you getting it?
Yes, sir.
So what I looked out for that made me took this trade from here is this is a break of structure here, and this 15 minutes time frame, this is a break of structure. So what we needed to look out
Okay.
for is the closest zone that caused this break of structure, which is where we took our trade. So chances are that price will never come back here. It might come back in the future, but currently now it might not come back.
Okay.
You understand?
Yes, understand now.
Yeah. So that's just it. So if you still go to 1 hour time frame, if you go to 1 hour time frame, you will still see that that particular spot, right? If you go to 1 hour time frame, this is on 1 hour time frame now, you see that there is nothing there. The only imbalance we still have here is that one I marked out. I said that price mitigated a bit, right? That's the only balance we still have here. On 1 hour, we can see that the thing extended all the way here. And then on 1 hour, it seems unmitigated. On 1 hour, it looks unmitigated. But however, let's just see what market got to offer us. I think from this particular swap, price should take off. But if it wants to come back and fill the imbalance, there is no issues. That's why our stop loss is, there is gap in our stop loss. So we don't want to tighten our stop loss. Let's say keep it here, and price will come back, hit you out, and still go in your direction. So it's better we give it space. So that's just it.
Okay, sir.
Yeah. All right. Thank you so much. Any other person? You have a question? Fire down. Any other person have a question? All right. In the absence of no other question, I think we have to. Okay. Somebody said SL and TP. Okay. The SL is 199.158. 199.158. For the person that asked me the XL and TP, this SL, then TP is 203.247. So this is SL and this is TP. Let me still drop the screenshot in the group. Let me quickly drop the screenshots in the group. Okay, for the person that asked for SL and TP, I've just dropped it on the group now. All right, guys, I'll keep you guys posted. Anyhow it goes, I'll still drop the update on the group. So just please, while the trade is going in your favor, don't go and start stacking positions. That's not a good way of trading, because once price retraces, is going to you are going to mess your account up. So please don't go and start stacking position. Allow the trade to run. Allow the trade to run. So like I said, this trade is a swing trade, but for me, I would advise everybody should take their TP at this particular TP level, right? But it's a swing setup. You can hold, or maybe if price gets to TP, you can close 50% of your profit and then leave the rest to run until it gets to. But for me, once it hits TP, I'm off. Then I'll still look for another entry to continue. That's the best way, right? So guys, thank you so much for your time, and let's have same time, same section next week Wednesday. See you guys live again next week Wednesday, same time, 12 noon. Let's analyze and trade together just like we are doing today. Do have a wonderful day, guys. I'll still keep you guys posted on however it goes. Shalom.